Unless the Western companies wake up to this model, China will dominate the battery. China Incorporated will make its money in the batteries and the EVs.
Hi, Mark. How are you doing today?
Doing very good, Gilbert. How are you?
I was doing good. Yes, adapting to the new world. How are you fitting in the new normal, we call it?
Well, I think we're the lucky ones because, we can work from home if we want to. And, we're not in the middle of a bunch of people all the time for our jobs. So I think we're the lucky ones, huh?
Yeah, that's true. The same for me here too. Yeah. So maybe we can start off by asking you a quick question here about your company, Giga Metals. Maybe you can give us a bit of a background overview of your company here.
Our core asset is the Turnagain project. I've been involved with this company and with this project since 2004. And what it is, it's a very large, low-grade, open pitable sulphide nickel and cobalt resource in northern British Columbia. It is, sort of similar to, say, Dumont, which the old Royal Nickel used to have, but different. So we've got very simple metallurgy due to the age of our deposit. It's a very young deposit. We don't have a lot of deleterious elements in the deposit or in our concentrate. Our material concentrates up beautifully. We can make a concentrate of 18% nickel reliably, 18% nickel, 1% cobalt in a sulfide concentrate that is very low in deleterious elements. And with our recently completed PEA, we're modeling, developing this in 2 stages that would ultimately, over 37-year mine life, we would produce an average of 33,000 tons per year of nickel in concentrate. Now, the economics at our base case in the PEA, our base case price is $7.50 a pound nickel. That was Wood Mackenzie's long-term price. Nickel, I should note, is currently around $9 a pound. But at our base case price, the economics are marginal. So just as an investment thesis, when you've got something very large with economics that are marginal at kind of a base case price, you're looking at something with a lot of what they call optionality. In other words, if the commodity price goes higher, then the depreciated net present value of a project like this goes a lot higher. And this is where you get real leverage to the commodity prices in something like this. We'll never be the low-cost producer, but it's enormous. Basically, in the nickel market as a whole, where do we sit? Well, nickel is going through a fundamental change right now. Currently, nickel, 70% of nickel goes to stainless steel. And however, there's a new use for nickel that is growing more rapidly than anything else, and that's for lithium-ion batteries, particularly for electric vehicles. More than half of the nickel that's produced in the world today is what's called ferronickel. It's a mixture of nickel and iron. It's perfect for the stainless steel business, but it's not perfect for the battery business, where you have to get nickel at very high purity. And so traditionally, nickel for the battery business comes from sulfide deposits, similar to ours. Ferronickel comes from, laterite deposits, from the saprolite portion of a laterite deposit. You just dig this clay up and you cook it in a furnace and you end up with nickel and iron. Again, perfect for stainless steel, but not perfect really for anything else. With the rise of electric vehicles, the demand for battery grade nickel is expected to increase over the next, between 2030 and 2040. By 2040, depending on whose estimates you go by, there's between 25 and 40 new projects of a similar size to Turnagain need to come on stream just to feed the battery demand. That's an enormous amount of projects. Nickel is emerging as the bottleneck in battery production. It's not cobalt, it's not lithium, it's nickel.
You talk about the outlook there. Maybe you can elaborate about. It seems like a growing trend here with the demand of the we call clean and ethically sourced nickel out there. So where would they come from, and what's the importance of these clean battery metals here?
Well, if you want to save the world by driving electric vehicles, you also want to know where do the materials for these vehicles come from, and most importantly, where do the batteries come from? And with nickel, it's very difficult to do ethical sourcing. A lot of the materials for the Chinese battery industry, which is the largest part of the battery industry currently right now, come from high pressure, high temperature acid leach projects, mostly in the Pacific Ocean, Indonesia, etc., in what's called the Coral Triangle. These deposits, first of all, they're strip mines. So generally you're mowing down mile after mile of tropical rainforest to get at your high content nickel clays. It's mostly clays. It's soil with a high clay content. And they're rare tropical rainforests because it's vegetation that is adapted to high nickel content in the soil. Most vegetation doesn't like high nickel content in the soil. And in fact, you can find these laterite deposits by flying around and looking for certain types of vegetation. And then you go and you mow it down, you process it in autoclaves under high pressure and high temperature conditions and add a lot of sulfuric acid. And then you precipitate out the nickel and the cobalt. The tailings in many cases are dumped straight into the ocean. So that's the source of a great deal of the nickel and cobalt for the Chinese battery business. If you want to have more ethically sourced material, you have to look at first world jurisdictions such as Canada, Australia, Finland, etc. Jurisdictions that have high standards for environmental permitting and high standards in terms of social license as well. So another element of this is that our goal is to be carbon neutral. Our goal is to be the first carbon neutral nickel mine. And we do this, we're approaching this in a number of ways. Right now, in our recently released PEA, we're modeling that we're going to get our power from the BC hydro grid. So it's a green source of power, but we're using diesel fleets. And with that, our carbon intensity is about 2.4 tons of carbon per ton of nickel that we produce. And when I say carbon, I mean CO2 equivalent. And that's for scope 1 and scope 2 emissions, which is kind of the standard used in the mining business. Whereas HPAL projects are in the 25 tons of CO2 equivalent per ton of nickel range, 25 and higher, up to, I've seen carbon intensity as high as 80 tons per ton of nickel produced. So, if you're interested in low carbon nickel, this is the project you really have to take a look at.
Sure, very interesting indeed. So you did talk about the details of the PEA earlier. Maybe how does this flagship project compare to other nickel project or cobalt project in the market? How do you compare with those other with your peers, let's say, companies?
Well, we're somewhat similar to, say, Dumont. We think we're going to be somewhat similar to Canada Nickel, but Canada Nickel's still exploring. So they haven't done an engineering study yet. really know what that looks like yet. Although I think it looks, pretty good so far. Really, a lot of the competition that we're facing are these HPAL projects, high pressure, high temperature acid leach. And so how they compare, and we've done a comparison of our project compared to greenfields HPAL projects that are out there. And we had that comparison done by Lyle Tritton, who's our in-house engineer. He had a 25-year career at Sherritt, and he's an expert on HPAL, and he's looked at most of the undeveloped projects around the world. Our economics are actually better than HPAL projects. For one thing, we've got less capital at risk at any one time because we model doing it in 2 stages. So first stage to construct our project is a CapEx of about $1.4 billion. And then we would double our production with another investment in year 5 or 6 of $500 million. So we've never got more than $1.4 billion at risk. An HPAL project of a similar scale, the CapEx is $3 billion. They don't stage at all well. So right away, you've got $3 billion at risk. HPAL has a history of failure, technical and economic failure. Many HPAL projects never get to nameplate capacity. Some do. But even if you make optimistic assumptions about HPAL getting to nameplate capacity, our economics are superior. And it's interesting because HPAL projects are getting built today, even though the economics are not very good. And people often ask me, like, why is that happening? Mostly they're getting built by China Incorporated. And China is thinking very strategically, I think, more strategically than Western companies. They want to dominate the battery business and the electric vehicle business. And in order to do that, they need a long-term supply of nickel at a price that they can predict. They don't want to be a slave to the nickel market, which has quite a history of volatility. So even though these projects don't make sense in Western economic terms, in terms of internal rate of return, once they're built, you know what your operating cost is to produce a unit of nickel. And so, like, the only way that a battery or car manufacturer can get a long-term contract at a fixed price of nickel is to own a piece of a mine or to own a mine. No producer is going to give you a long-term contract at a fixed price. Why would they? So China is thinking very strategically here. Plus, their cost of capital is very close to zero. So in terms of putting up $3 billion to build an HPAL facility, say in Indonesia or Papua New Guinea or anywhere in the Coral Triangle of the Pacific, they can do that with very low debt servicing costs. And then once it's built, they may take 10 or 15 years to pay back the capital. But that's okay. They've got decades worth of nickel supply at a price that they can predict. So, unless the Western companies wake up to this model, China will dominate the battery. China Incorporated will make its money in the batteries and the EVs.
Interesting insights indeed. So let's touch upon about the recent news here a bit. You recently expanded your horizon to Brazil. Can you share with us, was there such developments there with your company?
Yeah, that's really a regional grassroots exploration program. We're not devoting a big part of our budget to it, but it's the sort of thing that I personally really like. I like that kind of exploration. We've got some very good geological minds working on it. It's just been a very interesting process. So it started with, my perception that the São Francisco Craton in Brazil is thought by many geologists to be an extension of the African copper belt. South America and Africa were once the same continent. and then they broke apart. And so we got an artificial intelligence firm named Minerva Intelligence to analyze reams of data, a mountain of data about the São Francisco Craton in Brazil, and to sort of guide us towards areas that would have these sort of sedimentary copper deposits, copper silver, copper cobalt. But these sedimentary sort of red bed copper deposits can be very high grade and very large tonnage. So to me, these are exciting exploration prospects. With their help, we managed to plow through so much data. I mean, in the old days, only a major could have done this. A major with 5 or 10 geologists on staff devoted to this sort of regional research. That's what you would have needed to do this. But we were able to do it without having a huge geological staff. And then we now figured out where there's areas that are prospective for the type of deposits that we're looking at, that we've now staked a bunch of ground. We're now going through sort of grassroots exploration where we're going to do a lot of geochem, mapping and so forth. It's early stage exploration. I don't want people to expect much in a hurry, but it's very interesting. It's very high risk, high reward type work. But again, we're not blowing our budget on it. We're spending money judiciously there and hoping that we come up with some interesting targets.
Sure, great to hear. So in summary, what's your plan in 2021, and what are the main catalysts for investors to look for in the next 12 months for your company?
Well, we're hoping to get our engineering and metallurgy to a pre-feasibility level. So we're hoping to get up to our property this summer and do a bunch of infill drilling, geotechnical drilling, a lot of other work to collect the data we need to advance the project to the pre-feasibility level. Our thinking is that, although nickel prices are not yet, they're headed the right way, but they're not yet at a level that would give our project robust economics. We think that if the electric vehicle revolution is going to continue, the nickel price has to go to a point to incentivize construction of large new nickel projects such as ours. So our aim is to de-risk this project as much as we can. We think it'll get to the point where if nickel starts to get spiky, it starts to get in shortage in terms of battery grade nickel, the market could get spiky, and that's when our project will come into play. So we just want to de-risk it as much as we can ahead of that happening.
Thank you here. Thank you for sharing your insights in the nickel space with us, Mark, and thank you for spending time with us here today.
Well, thank you very much for your interest, Gilbert.
Yeah, thank you again for joining us in this PDAC special coverage series. So until next time, we'll talk again, Mark.
Very good. Thank you.
Yeah.
Bye now.